SABMiller posted a 14% rise in its first half adjusted earnings per share to 118 US cents, boosted by its acquisition of Australian brewers Foster's and strong growth in Latin America. The world's second biggest brewer increased sales by 11% to $17.47 billion. The company has raised its interim dividend by 12% to 24 cents. The brewer says it will take advantage of its growing presence in emerging markets. SABMiller ended the day strongly up. Early Executive Chairman Graham Mackay had this to say with regards to growth in the emerging markets.
We're still seeing pretty robust growth across the emerging markets. It is slowing down slowly in most areas, not so much, for instance, in Africa, where the growth rate is holding reasonably steady, or has been holding reasonably steady, but has been coming off slightly in Latin America. China, people have been talking about a lot, but we think that that's more due to the political change there now than a real drop in underlying consumer demand.
Well, joining us for more on the line from London, Julian Wenzel, Head of Research at Macquarie. Hi, Julian. And just looking at the numbers and the commentary from SABMiller, they're certainly upbeat also that this can continue in the second half. And of course, we know that fortuitous exposure to emerging markets, and that will continue driving the numbers.
Yes, I think it was a cracking result. I think the market was caught short ahead of the results, people expecting there to be a squeeze relating to raw material input cost inflation, and I think people also expected there to be some tail off in the volume performance. And I think this really highlights the benefits of the diverse portfolio of assets SABMiller has and its exposure to emerging markets. If one casts one's mind back a decade, this level of exposure to emerging markets was seen as a significant negative for the company, and from a ratings perspective, it suffered. But I think, as people started to understand the diversity of the portfolio, its exposure to growth, and in a world where growth is anemic at best or marginal, this remains a very attractive asset to have in one's portfolio. So I think, a very pleasing result. I think they're able to pull two levers at the moment. One, a growth lever. The other lever they're pulling at the moment is a cost lever. They're taking a lot of cost out of the business, and I don't think we've seen all that they can do from a cost perspective. I think they're really only in the front end of a cost initiative, and I expect further costs to be taken out of the business, and I expect that to give us incremental margin enhancement over the coming years.
Julian, is it too early to come to a conclusion about the Foster's acquisition, the $11.8 billion it contributed to these numbers? At this point, was it a good acquisition?
I think very, very hard to judge. I think what they do have is a wonderful ace in their sleeve, which is the funding that they managed to secure on the deal. They secured nearly $8 billion of funding at just on 3.2%. That's significantly below the initial estimate of funding of about 5.4%. So that gives them a buffer of about $190 million per annum of net benefit in terms of their funding coupon on the debt. And that enables them to invest, I think, more behind the brands, take much more time at reconstructing that market and taking that market back to basics. And so what you're seeing is they're concentrating on rebuilding the core brand, Cub. So UB is going to drive the performance. They're basically, Victoria Bitter is going to be the real heartland of their campaign. They've taken it back to its original alcohol content. My sense this is going to take 2 to 3 years really to materialize, but they do certainly have a significant buffer in the financing.
Julian, you sound very upbeat on this business. What would the risks be for SABMiller? I'm just thinking in the one sense, and Foster's would be an example of that, a big business such as this needing to do big acquisitions to keep those earnings growth numbers coming.
Yeah, I don't think it's really about earnings growth in terms of acquisitions haven't been the driver of earnings growth. Yes, they've made some very clever strategic acquisitions, and they're harvesting the benefits of that. So Bavaria and Colombia is a great example thereof. And hopefully Foster's in time to come will prove to be a similar type opportunity for the group. But they do have an organic underlying structural advantage. They're exposed to demographically markets that are in the development phase with positive demographic skew, which gives them a better growth rate that's faster than their peer group. And that's the real USP of this company. I think for South African investors, particularly with the ongoing risks associated with the rand, I think the rand looks under significant pressure. This provides you with a wonderful portfolio opportunity to diversify your risk and get exposure to a global business. And so certainly from my perspective, be a core holding in any portfolio.
Julian, does this Foster's acquisition allow for any synergistic gains, or is it, to your mind, overwhelmingly a bolt-on that just can be better managed?
I think twofold. I think one, certainly I think under SAB stewardship, you'll see better management of channel, better discipline on price discounting, better relationship with the key channel owners there, Woolworths and Coles. But also, I think there are certainly significant synergies to come out of this. They'll extract $130 to $150 million of synergies. But those synergies are broadly procurement synergies. There are no contiguous synergies in terms of geography. Australia is far away. It's very hard to argue that there are adjacency synergies in this acquisition.